please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good morning and welcome to Power Breakfast in the Mumbai News Center. I am Anisha Jain and with me is Nigel D'Souza. Hi Nigel, good morning.
Well, Anisha, good morning. But remember, India has taken a giant leap in World Bank's Ease of Doing Business ranking, jumping 30 places to score a century. This is India's best performance ever on these rankings.
Okay, so starting the day with a bit of happy news that India has jumped around 30 points on the World of Ease of Doing Business ranking. But first up, let's run you through the other top headlines then. US markets posted another solid monthly gain as consumer confidence data strengthens optimism in the growth outlook. Asia begins on a positive note. Investors await manufacturing data in China and Fed's rate decision later today.
The World Bank gives a thumbs up to the Modi government as it ranks India among the world's top 100 nations on Ease of Doing Business index. Reforms have pushed India up a whopping 30 places to the 100th spot.
Bharti Airtel profit falls 7% sequentially, dented by pricing pressure in India business, but operational earnings and Africa business beat estimates. Interglobe Aviation reports a stellar quarter, profit boosted by a one-time payment towards engine issues and delayed aircraft deliveries and higher margins.
And Tech Mahindra's profit is likely to fall close to 8% despite operating income growth. The revenue growth may be led by the enterprise vertical. Margins to seen higher. Hero MotoCorp sales growth will be driven by 11% jump in volumes. TVS Motors seen posting a steady quarter.
Auto stocks on the radar. October auto sales expected to be a mixed bag. Medium and heavy CVs and passenger vehicle sales seen strong, while tractor and two-wheeler sales may be impacted by higher base.
A new India Assurance Company's 9,600 crore initial public offer is set to open for subscription today with a price band of 770 rupees to around 800 rupees per share. Well, it's more positive than negative on the Asian markets early this morning. Investors, they are digesting regional earnings report. And in fact, we have the Nikkei. That's flying away. That's really on the weakness that we're seeing on the yen. It's moving towards a 114-odd mark. So that's good news for export-oriented stocks are there. And that's why, in fact, the Nikkei is sitting with good gains. But it's not just the Nikkei. You pull up the Kospi as well. That as well had started off in the green. And in fact, it's just building on those gains. Currently moved to the high point of the day, sitting with a gain of close to around 1%. Remember, investors are also awaiting the release of China's Kaizen Manufacturing Purchasers Index after the official numbers came in a tad bit lower than what the street was working with. So we'll wait by for those set of numbers. But otherwise, positive cues coming in from the Asian markets. And the SGX Nifty as well is indicating we're likely to start off with a gain of close to around 30 points.
Okay, and in the US markets, the Wall Street ended the session on a positive note, with the Nasdaq scoring the best day of the three major indices. However, investors were a bit cautious ahead of the announcement from the Fed later today. CNBC's Hampton Pearson gets us a wrap of all the action on Wall Street.
A busy day ahead. The Fed wraps up a two-day meeting with no rate hike expected, and Republicans in Congress will roll out the details of their tax cut plan. There could be market reactions to both. Looking again to the stocks finishing higher on Tuesday as we close out the month of October. The Dow up 28 points, the S&P higher by 2, the Nasdaq up nearly 30 points, driving those higher numbers. Consumer confidence surging, hitting its highest level in 17 years. The index at 125.9 for the month of October, beating economists' expectations. Now that index looks at how Americans view economic conditions for the next 6 months, and of course consumer spending accounts for nearly 70% of all economic activity. Qualcomm shares falling 6.5% as its partnership with Apple appears to be in jeopardy. The Wall Street Journal reporting the tech giant is in the process of designing products without Qualcomm components. The news comes amid a legal spat between the two companies over the way Qualcomm has been distributing its technology.
Well, the Federal Reserve delivers its interest rate decision later tonight. Now, policymakers are universally expecting the U.S. Central Bank to keep rates largely unchanged. CNBC's Steve Leisman is here with the results of the Fed survey.
The CNBC Fed survey shows 98% of our respondents expected to keep rates unchanged. 96% say there'll be a third rate hike coming in December. That's a bit higher than the market prices. And 3 rate hikes are expected in 2018. Let's see what that does to the outlook for rates over the long run. There's the 1 hike for 2017, the 1 additional hike, bringing it to 1.4. There's 3 more hikes there built in for 2018, and then just 2 more for 2019, leading to a very low long-run rate of just 2.9%. That's the bottom of the cycle for many other times we've had the Fed hiking and raising rates. Let's look at the outlook for stocks. Just very much think that the gains for the year already priced in just 1.7% from here to a S&P level of 2617, going up a little bit more next year, 2700, 2708, for a 3.5% gain from 2017 to 2018. We asked about this corporate tax cut that the president has proposed. Is 20% the right number? Well, 58% of our respondents say yes, it is. 19% say no, it ought to be a little bit higher, and 12% want it lower. But there is one big disagreement they have with how this is being proposed. We asked, should tax cuts or tax reform be deficit neutral? 56% say yes, it ought to be deficit neutral. 44% say no, you can do it while raising the deficit. Steve Leisman, CNBC Business News.
Well, the European markets look quite good. Some stocks were there closed at 5.5 month highs. In fact, those indices did end with some gains. Remember, we had quite a lot of gains that we saw, and that was supported by economic data that did come in. Now, the Eurozone growth of around 2.5% on a year-on-year basis looked quite good, and unemployment is at its lowest levels we have seen since early 2009. So that is well pretty good, and that's why both those two markets ended mildly in the green.
Okay, let's shift focus now to the currency space then. The dollar edged higher, underpinned by solid US data and logged towards its strongest monthly performance since February. Markets await a whole host of central bank meetings this week and the nomination of the next Fed chair.
And in the world of commodities, and crude oil prices settled higher again, notching a monthly gain of more than 5%. Analysts believe that the bullish sentiment has driven Brent crude prices to its highest levels in more than 2 years, and that could encourage US producers to explore more oil. Country Brent crude prices above that $61 per barrel.
From the precious metal space, gold slipped as the dollar recovered, and precious metals investors turned cautious ahead of central bank meetings this week. US payroll data and the announcement of who will be the next Federal Reserve chair.
All right, then, and some horrific news coming in early this morning from New York City, where a truck driver plowed into pedestrians in Manhattan, killing 8 people and injuring 11. The attacker drove his truck through a bicycle lane, hitting riders and pedestrians for more than a few blocks. The deadly rampage came to an end when the truck hit a school bus. The driver was shot by police officers when he was trying to escape the crime scene, and he's currently in surgery. US security officials are describing this as an act of terror. The suspect truck driver has been identified as a 29-year-old from Uzbekistan.
Well, back home on the Lal Street, the markets took a breather yesterday and traded in a narrow range and ended just with a tad bit of negative bias. The Nifty ended 0.25% in the red and broke the crucial 10,350 level. The Sensex too ended with a loss of around 50 points. But how are the cues stacked up for the day today? Naveen joins us now to take us through all the market cues. Good morning, Naveen. Take it away.
Good morning, Anisha. Yeah, you really pointed out it was a day of consolidation in trade yesterday. But beginning today, you see the foreign indices, they have been more or less in the fairly positive side, the likes of Dow as well as the European indices. But SGX Nifty, that has been indicating to an opening above the 10,400 mark. Also, there is some support being lent from the macro factors. Remember, in terms of ease of doing business, India has been ranked at 100, almost 30 notches upside. So that will come as a fair bit of a positive. Now, talking about market-specific levels, if you see 10,400 call, that has a premium of close to 114. So we can see some bit of a resistance around the 10,500, 10,520 mark. On the other hand, support seems to be lent at around 10,140. The 10,200 put, that has a premium of close to 77. And also remember the 20-day moving average, that's around the 10,140 mark. So see that level to be one of the key supports. On the other hand, institutional flows, that seems to be positive in terms of the net buy. We saw a net buy of close to 65 crore. And one more key positive will be that the futures premium, if you see, that has increased from 24 points to close to 33, 34 points. That will also come as a big positive for the markets. Back to you.
Okay, all right. Naveen, what about the stocks we should be looking out for that are going to be reacting in trade today?
Well, Nigel, a whole lot of them. So few results that are the big results that are awaited today include names like Hero MotoCorp, TVS, Apollo Tyres, as well as Hexaware. Also keep a keen eye on the overall auto pack. Remember, today beginning, we will start with the October monthly auto sales data. So the likes of Maruti, M&M, we are expecting a mixed bag, but all these stocks will be in focus in today's trade. Some of the results that came post-market yesterday, quite big names. Bharti Airtel, remember their African business, that seems to be improving. So that will be in focus. On the other hand, Indigo will be clearly one of the stocks of the day. Stellar set of numbers. The EBITDA, that grew by close to 600 basis points at around 29%. Divis Labs also, it's not such bad numbers. See, if you factor in that the inspection. On the other hand, IIFL Holdings, Abhishek tells me that the company has been posting strong performance across businesses and has been beating the earnings estimate in this quarter. Syndicate Bank also lowest credit cost in last 8 quarters, so that comes in as a positive for Syndicate Bank. Now talking about the IT pack again, KPIT came with stellar set of numbers. If you see, the PAT was above estimates, strong revenue growth as well as margins. Margins were above almost 100 basis points above the CNBC TV18 poll. On the other hand, Kaya, weak set of numbers continue. If you see the EBITDA loss, that came in at around 7 crore versus 5 crore. EIH Hotels also bad numbers in terms of revenue as well as the losses increasing. Sanofi, good, decent numbers. PAT has increased and even the margins expanded by close to 500 basis points. But Z Media, recently demerged company, bad set of numbers. Margins have been plummeting by almost 400 basis points and 16%. Back to you.
Okay, Naveen, thank you for that.
Let's get straight to the big story from late last evening. World Bank endorses Modi's government reform agenda. India has taken a giant leap in World Bank's ease of doing business rankings, jumping 30 places to score a century. This is India's best performance ever on these rankings. Let me quickly take you through what has worked for India this time around. Greater protection for minority investors has led to a big boost as India is now among the top 5 countries for protecting small investors. World Bank has also recognized that India has made paying taxes simpler for companies. And on that parameter, India has recorded a jump of 53 places.
While enrolling out of the insolvency and bankruptcy code has also given a big boost to India. With a jump of 33 places, India is now ranked 103rd for resolving insolvency. Now, reacting to the new ease of doing business ranking, Prime Minister Narendra Modi said, and I quote, "The report acknowledges India as a top improver with the highest jump in rank of any country in doing business. Report 2018. India is the only country in South Asia and BRICS economies to feature amongst the most improved economies of the Doing Business report this year."
All right, then Shireen Ban, in fact, spoke to CEO of Niti Aayog, Amitabh Kant, and asked him what needs to be done to improve ranking considerably so as to ensure we enter the top 50.
Shireen, first of all, I'm a great believer that India can easily, jump into the top 50 simply because there's great political will. The first meeting which the Prime Minister had addressed to the secretaries, he talked about making India easy and simple. The Prime Minister has been a great believer in structural reforms. I mean, the country has pushed for major structural reforms. GST, RERA, bankruptcy law, scrapping laws, 1200 laws, all these are major structural changes, the kind of which the country has never seen before. Now, while we've jumped 30 positions, it's a remarkable achievement. Actually, India has jumped, in the last 3 years, India has jumped 42 positions. From 142 In 2014, we are at 100 now.
Yeah.
So we've jumped 42 positions. Now, we need to make this, push this momentum and get into 50. Now, my view is very simple. Just focus on, one, it's very difficult to get construction permits in Mumbai and Delhi. You need to make it online. Paper documents are spread in several documents. Make it online. No human intervention there. Registering a property is very, very complex.
Yeah.
And thirdly, enforcement of contracts. Enforcement of contracts, actually, frontier to distance, we've gone worse. The number of days we've gone worse. And this shows that you can reform, you've carried out reforms within the government, but it's very important to carry reforms in commercial courts, ensure that there are no adjournments beyond 3 days, and the number of days within which the commercial cases are solved is much quicker, much faster.
Okay, and Shireen also spoke to DIPP Secretary Ramesh Abhishek. He said that the impact of GST being implemented on the ranking will be seen next year.
They have also importantly recognized GST as a very invaluable and important substantial reform done by India. The impact of GST will be felt in the next year's ranking.
So GST has not been taken into consideration for this year's ranking. Yeah.
This improvement in paying taxes has happened without factoring the GST.
But do you fear, sir, given all the concerns that we have seen with respect to the compliance with GST, the procedural complexity that people are now talking about, that if we don't ensure that we address some of those concerns, that it could be a problem going forward?
You know, whenever World Bank looks at any paying tax parameter, first is that the registration should be simple and easy and time-bound. That GST provides. In GST, the entire system is done on a GST electronic network. Yes. So the compliance, the paying, taxes, filing.
But that's where we've been facing the problems on the on the GST answer.
See, we have seen that even in much smaller systems. You know, you take EPFO, you take any system. Whenever you have an online system, sometimes there are glitches, but those are addressed as and when as time passes.
Sure.
And under GST network also it is being addressed.
Yeah.
So we are absolutely confident that the GST, the way it has been designed and implemented, it is going to make a big impact in our rankings next year.
We also spoke to Arvind Panagria, the former vice chairman of Niti Aayog. He said that the improvement of ease of doing business will garner India more recognition. He also expects to see overall pickup in the economy and investments going ahead. Let's take a look.
The biggest thing is that on the ground, we all knew that improvements had been happening quite rapidly, but the external recognition had been slow to happen. And this was also reflected in the way that newspaper reports in the Western press reported on showing a bit of reluctance on the acceptance of the major reforms that had been happening. I am now very pleased that we have shown up in these rankings with a bang. And I think, you know, now the due recognition will happen in the Western press as well.
Dr. Panagria, you know, while the Western press will also take note of this headline coming in from the World Bank with respect to India, let me ask you about what you believe this will do as far as investor confidence is concerned. It's no secret that it's been domestic investment that has lagged behind foreign investment. Foreign direct investment has been at record highs. Do you believe that this is going to have a meaningful impact in encouraging incremental flows into India or even fresh investment?
Let me point out, though, I mean, there is this general kind of sense in the press that domestic investment is lagging and so forth. But actually that I don't see in the data that heavily because, you know, you still have the gross investment as reported by the CSO staying around about 30% of the GDP. So there is some sort of misconception also within our own domestic media. We need to look at the numbers more carefully. I pointed out in some of the op-eds also that I recently wrote that even the private investment as a proportion of the GDP actually looks quite good. So that correction needs to be made. But of course, having said that, I have been arguing this for quite a few years now, actually, since I joined the Niti Aayog and even before that the NPAs in the banks had been a very serious problem. Nobody tackled it. Right? You know, our previous RBI governor really was reluctant to move on the NPAs directly. I think he did a great job of identifying them, but in terms of actual cleaning up, no movement happened. Now the new governor actually has moved very aggressively and we are seeing major movement. And the government has also very fortunately announced the recapitalization package. I think now you will see all around movement in the economy and particularly on the investment front.
Well, the government has extended till November 7th the last date for e-filing of income tax returns for those taxpayers who file audit reports. Arun Giri joins us early this morning with the details. Arun, good morning. Tell us more.
We broke the good news last night on Tax Sutra and CNBC around 9:30, and chartered accountants all across the country. You have 2.5 lakh chartered accountants. At least half of them were praying anxiously for a tax audit due date extension, because most of them had several incomplete returns, overloaded with work, and the income tax department website unexpectedly did not crash, but was very slow, not responding yesterday, especially since evening, because there apparently was a lot of load. Also, one more reason why the chartered accountants and a lot of chambers of commerces made representations to the finance ministry for a date extension. In fact, over the last week or so, the reason being that the GST returns deadline or the submission deadlines were also coinciding with the tax audit deadline, which was October 31st. And this is after a 1-month extension of the due date, which had already been given. The tax audit due date, which had been extended to October 31st. But with the GST deadlines also clashing with this, chartered accountants were literally praying yesterday for a due date extension, which has been granted till November 7th. So a relief for most chartered accountants.
Okay, all right, Arun, thanks so much for joining in and in fact running us through all those details. But let's shift focus then to earnings. Bharti Airtel's second quarter profit fell. It was dented by pricing pressure in the India business, but the Africa business did beat estimates. Ronit was tracking those numbers very, very closely all of last evening. Ronit, what do you make of those numbers?
Thanks, Nigel. So absolutely good numbers coming in from Bharti Airtel. So I'll start with the consolidated revenues. They came in around to 1% lower, but this was largely in line with estimates. But the big surprise were the operating profits that came around 2% higher, largely due to operational efficiencies kicking in because they curtailed their marketing expenses. Next, moving on to the margins, that also came in higher at 36.7% versus 35.6% quarter-on-quarter. Finally, the profit after tax came in around 343 crores versus their estimates around 319 crores. So that was also a beat. Moving on to Africa, the big surprise over there were the margins, which came around 400 bips higher at 32.8%. Largely, they have curtailed their capex in Africa, as well as they have stopped their network expenses, which led to this margin meet. And also, the EBITDA came in around 24% higher, which was the highest EBITDA ever in Africa. So this was a good set from Africa coming in. Moving on to the India business, the India mobile business revenue was down around 5% quarter-on-quarter, 12,000 crores. This was largely expected. Moving on to the average revenue per user, that came in lower at around 145 versus estimates around 146, 147. And this is the lowest average revenue per user in almost 8 quarters for Bharti Airtel. So that is one sign of worry. Moving on to the key performance indicators, the first is the minutes. The minutes were up 3.6% quarter-on-quarter, which is also higher than estimates, as well as the data usage was up 65%, higher than estimates as well. Finally, the company also said they're evaluating offers from global investors to sell their stake in Bharti Infratel. So on the back of this, you can expect Airtel to open the green today.
Okay, thank you, Ronit, for that. So Airtel to open in the green on back of good set of numbers. But Nigel, tell us, how will JSW Steel open given the fact that the numbers slightly missed estimates?
Well, it was a bit of a miss actually, Anisha. Maybe in fact analysts on the street are expecting too much from these Ferris guys, and that's why in fact it did appear a bit of a miss. Now the outlook remains positive. Remember, the second half of the year should be much better. But the two key reasons why there was a miss was because realizations, most of the street was factoring in a bit of an increase, where it was more or less flattish or it was mildly negative on a quarter-on-quarter basis. So that was one factor. Second factor is input costs like zinc, we have coking coal costs as well. They have spiked up on a year-on-year basis, and that's what hurt them. Just to run you through the numbers, top line good growth of around 27%. The operating margins, though, that was a bit of a disappointment, came at around 18%, and profit number came in a tad bit lower than the 1,000 crores that we were working with, came in at around 840 crores. Now the top line, there was a good growth. The sales volume, so there in fact that was a bit of a pleasant surprise, came in higher by around 2%. We already had the production numbers, that was down by close to around 1%. So sales volumes increased when production numbers were lower. Told you there was some inventory liquidation. But the EBITDA per ton, that's always a crucial number, domestic EBITDA per ton. Well, it's coming at around 7,460, and that in fact is much higher in terms of a sequential basis as well as a year-on-year basis. But that wasn't as good as what the street was working with. Most of the street, in fact, was expecting a number closer towards that 8,000 rupees on a per ton basis. So that was a bit of a disappointment. And if you take a look at the coated steel products, well, that's been improving. Over the last few years, I've been tracking the EBITDA from there was around 50 crores, went to around 100 crores. Well, it came in at around 141 crores, and that's the lowest I've seen in the last 5 quarters. So that was a bit of a disappointment. Why is that? When you're making coated steel, you're using some part of zinc. And remember, zinc prices are up between around $400 to around $500 on a sequential basis. So that's what hurt them. The average coking coal cost as well, yes, it did dip on a sequential basis. It came in lower by close to around $18, approximately at around $181 per ton. But on a year-on-year basis, it's up close to around 80%. So just keep that in mind, and that's what really impacted them. What the management told me is going ahead, these coking coal prices could go up by roughly around $5 to around $10. Why is that? They're buying coking coal at spot rates, and that's why in case they do get any kind of lower cost coking coal, that benefit will flow in only in Q4. For the time being, for this quarter, it'll be a bit of a dent to them. Well, CLSA, they continue to be positive. They've increased the target price by 15 bucks to 315 rupees. They're expecting steel realizations and margins to spike up in the second half. They're factoring in a 17% CAGR growth on the EPS in the next 3 years. And in fact, their target price is based on a multiple of around 8 times EV upon EBITDA. Credit Suisse as well. They're maintaining outperform. They've increased the target price to there as well. For this year, that's FY18, they have trimmed their EPS estimates by around 5%. But for FY19, they've increased the EPS estimates by 4%. Why is that? All those benefits that they saw coming in the second half of this year, well, now they expect that to come in FY19. The stock should open up actually a bit in the red because of these numbers. A bit of a miss is what JSW Steel. Second half of the year looks good though.
Okay, so a bit of miss as far as Q2 is concerned, but the outlook remains positive. But let's talk about Interglobe Aviation now. That one posted a stellar quarter. Varinder joins us to tell us about the numbers. Varinder, the numbers look really good. Is there any one-off in them, or they're just operationally very strong?
There are various ways to look at numbers. Of course, there was Pratt & Whitney settlement which happened, and that is why the other income came higher for this company. But, honestly, I don't look at profit number. Look at the, Indigo, look at the EBITDA. EBITDA was up 61%. EBITDA margins came at 30% compared to 23.5%. People on the street were expecting 25 to 26%. Forget about all that. Look at the yields. Yields came at 9%. The expectation the street was it could be anywhere between 2, 3, 5% at the maximum. Morgan Stanley has an estimate of 2%. Indigo is a stock which is built on skepticism. We all know that the IPO came in, the stock ran up, it went below the IPO price at 800 rupees. From 800 rupees, it is moving up to nearly 1200, right now 1250 something. And now people are taking cognizance of what a leader can do, with 40-45% market share. The important thing, is that now all those Neon and Pratt & Whitney, thing is behind Indigo. And, JP Morgan has come up with a report where they have upgraded the stock. Price target is nearly 1500. The point is simple. It was a very, very good quarter for Indigo, which was Q2. Management remained very confident on the con call. Crude has been moving up, which is one thing you got to watch out for. It is now back to 60, which is one important thing to watch out for. But otherwise, forget about anything. For me, the most important number was the yields. Yields moving up by 9% is something no one expected.
Okay, Varinder, thanks so much for that. So, good beat on all parameters of that in terms of Interglobe. But let's shift focus then to earnings that we're expecting today. And from the IT pack, Tech Mahindra is reporting second quarter numbers. Anisha, take us through. What is the street expecting there?
Well, the 4 IT companies that have reported numbers in terms of the top companies, they haven't really surprised on the upside, and we're expecting a subdued quarter from Tech Mahindra as well. The dollar revenue is expected to grow by 3%. The rupee revenue growth of around 2.9%. Margins, yes, a bit of expansion coming in there. We're expecting the number to come at 10.5% versus 9.4% that they reported last quarter. If you look at the profit after tax, that is however expected to dip down by around 8%, given that there was a one-off income in the last quarter as well. If you look at the overall constant currency growth, we're expecting growth of 2%, but 1% of it is organic and the other 1% is coming from the acquisitions that they did last quarter. Now, to talk about the details, the revenue growth is expected to come from the enterprise vertical of the company. As I mentioned, it is the HCI integration that happened in the quarter gone by that is expected to add 1% to the revenue. The EBITDA, yes, a bit of expansion coming in there because of the lower visa cost as well as the cost rationalization efforts taken by the company. And of course, there's a cross-currency tailwind as well. However, net profit, as I mentioned, there's a one-off in the last quarter, as well as there are lower forex gain expected this time around. That should really dip the profits this time around. Other than that, key thing to watch out for, the company has been disappointing us on margin front. We need to know what the roadmap for improvement in margins is, roadmap for productivity and automation, as well as the turnaround strategy for LCC and Comviva. Nigel.
Yes, Naveen's with us in the studio currently. Naveen, we're going to be watching out for the auto sales numbers. What are you expecting there? I think a bit of a mixed bag?
Totally, Nigel, a mixed bag in terms of the segment. So what I'm saying is that in the last year, remember in October itself, we had Dussehra. So that was one of the reasons why overall pack, the likes of the two-wheelers as well as tractors, we had seen some bit of a fillip. But this time, although rural demand has been doing well, but the higher base, that will have an impact on a few segments. And I'll begin with the segments. M&HCV, over there, that is one segment which we will see having a positive effect because see, festive demand doesn't have a direct effect on M&HCV. So M&HCV will be doing good, led by higher replacement demand as well as a higher demand for tippers. On the other hand, base effect will be clearly impacting two main sectors, that is tractors as well as two-wheelers. So that will be more or less muted. On the other hand, passenger vehicle segment, the likes of Maruti as well as Tata Motors, they are expected to continue their consistent run. But M&M, the bit of a problem over there we are expecting. On the other hand, Maruti is expecting a 15% growth on a year-on-year basis for their overall sales. On the other hand, M&M is seeing a dip for their auto segment by close to 2% as per our poll. Hero is expected to continue with their 8% around journey, and TVS also around 10%. But if you see the tractor segment, both Escorts as well as M&M, 13% cut is what we are seeing for M&M, while 9% in terms of a year-on-year cut for Escorts is what we are expecting. Back to you.
Okay, Naveen, looks like you're going to have a busy day with the earnings preview as well. So Hero Motor and TVS Corp are also reporting numbers. First, take us through Hero Motor.
So I'll begin with Hero Motor. Yeah, more or less steady set of numbers. I'll begin with the revenue. Remember, in terms of the revenue, we are expecting 12% growth. They have already done 11% volume. So the overall revenue growth will be led by the volumes itself. But margins over there, like other players, if you see the likes of Maruti as well as Bajaj Auto, remember both of them had surprised us on a positive way. But over here, we are expecting a cut of close to 100 basis points. Around 16.5% margins is what we are expecting versus 17.5% in the base quarter. Why? Two reasons. One, although there has been a bit of positive operational leverage because of higher volumes, but still we will be having an impact of the commodity prices, which had moved up close to 18 to 20% on a year-on-year basis. Also on the PAT level, we are expecting a growth of close to 3%. But apart from the numbers, the key things to watch out in the Hero Motor numbers is their post-result commentary. So over there, we are expecting on how the rural push is. Remember, majority of their revenues come from the rural sector. So over there also, we will be expecting some bit of an announcement, as in some bit of a commentary from the management. On the other hand, any impact of GST on their spare part business. Remember, there has been a change in the GST rates. So any bit of impact on the spare part business will also be something which the street will be keenly watching for. But overall, steady set of numbers from Hero MotoCorp is what we are expecting. But talking about TVS is one number, at least as per the expectation, the numbers will be as steady can be. So the revenue growth is expected to be 19%, led by 16% growth in the volumes and 3% improvement in the realizations. Now, why is the realization increasing? Two things. One is, if you see their overall product mix over there, there has been the move towards more of motorcycles as well as scooters. So 43% jump has been because of motorcycles and scooters. Meanwhile, the other lower realization products like the mopeds, they have reduced in the overall number. So that will lead to a 3% overall realization jump. Revenue jump 19%. Margins, which have been the biggest bone of contention for investors when it comes to TVS, that is expected to be around 8% versus 8%. So more or less steady on the margin front. PAT is also expected to grow by 19%. But remember, TVS is one stock which has been very volatile on the day of the earnings. So we'll have to keep a watch, and this time more or less it will be on the middle of the day because 2 o'clock is the con call. So we are expecting the numbers to come around 12:31. Keep an eye on that stock. Margins is one thing which we'll be keenly watching. The management has been saying us that 10% margins is what they're expecting. They haven't done that yet. So let's see how the margins perform for TVS in this quarter.
Okay, so let's take a look of what is happening in the world of commodities, and Manisha Gupta joins us for that. Good morning, Manisha. Crude holding above the $61 mark?
Well, it is, and good gains continuing for that one, and we are nearly 38% up for the Brent prices now as far as the 2017 June lows are concerned. While the crude oil prices are holding on gains, what really has surged overnight has been the nickel prices. More than 5% of gains. It's trading at a fresh 2-year high. While the prices, of course, still are much lower from its all-time highs that we saw in 2007. But the whole thing about the electric vehicles demand expectation in next 5 to 10 years is what really seems to be driving the battery and the nickel prices on the higher side. The other metals haven't done so well because if you look at the iron ore prices, they are down for a 5th straight day today. The month of October saw declines by nearly 6%. So the ferrous metals are under pressure, but much of the non-ferrous space is still buzzing in Asia right now.
Okay, all right, Manisha, thanks so much for that. But let's get back to earnings then. Godrej Consumer is going to be in focus today as it reports its earnings. Mangalam joins in early this morning to run us through a quick preview. Mangalam.
Well, Nigel, you know, the last quarter for Godrej Consumer, their Indonesian business, that was a bit of a problem. So which is why we saw the stock correct all the way from higher levels, close to around 1,070, just down to about 900 rupees. From there, it's seen some bit of support. This quarter, the most important thing, apart from the Indian business, will be their commentary on the Indonesian business. As far as numbers are concerned, we're expecting a consolidated revenue growth of 7%. Remember, Godrej Consumer is one of those FMCG companies where 50% of the revenues come from abroad. The EBITDA is likely to grow by about 11% because of benign raw material costs, and the margins are likely to be around that 19.7% mark. On the bottom line, we're expecting a growth of close to 12.5%. Most importantly, for the Indian business, we're expecting a volume growth between the range of 6 to 8%. This is something that the company explicitly mentions just as the results come out. 10 to 12% growth in the soaps business is what we're seeing. But Indonesian business, remember the last quarter was weak. We're watching out for incremental improvement and the management's commentary thereabout.
Okay, Mangalam, thank you for that. But also tell us the cues to watch in the derivative space.
Well, as far as the F&O space is concerned, yesterday the FIs, they sold big in the index futures itself. And we saw the FII long exposure fall from 70% to about 68%. Add to that, there was a big buy figure in index options as well. Keep an eye out in the index option space out there. While the FIs bought way more puts than they bought calls. In fact, they unwound a few long positions in calls. What was actually heartening was the fact that they went ahead and wrote a lot of puts as well, which would indicate support at the lower levels. So 25,000 puts nearly sold. That is roughly 8 puts sold per call sold. That is as far as the index option space is concerned. If you take a look at a couple of stocks, in fact, in the index options itself, the 10,200 put was the most active as far as writing is concerned. 10,400 call has the maximum open interest, so we're waiting for some sort of resistance at those levels. If at all we do surpass that, there could be a lot of short covering. As far as individual stocks are concerned, IB Real Estate, that one moved in yesterday's trading session out of the F&O ban. Remember, it was in the F&O ban from the first day of the series, so we'll keep an eye out on that one very closely. A few shorts were covered on Axis Bank after that 9% rally that we saw in yesterday's session. A lot of long positions, they were unwound in a few PSU banks which underperformed yesterday.
Okay, all right, Mangalam, thanks so much for that. Well, on that note then, we'll wrap up on Power Breakfast. Bazaar Morning Call comes up next.